out of school. Did that for 8 years. Then I went into semi-retirement in Paris for 5 years. Then I came back to Los Angeles and started the Hollywood Stock Exchange. I got a patent on a virtual currency, patent number 5950176, the first patent awarded for a digital currency. Then I sold that company to Cantor Fitzgerald on Wall Street, went back to France, went back into semi-retirement. Then I met Stacy in the south of France, and we started doing content. She had a background with the BBC and in also Hollywood, doing script doctoring, some producing, and we started doing content. And then, really by accident, we got commissioned to make a film for Al Jazeera English in 2005, I think it was, or 2006. And we ended up making a series of documentary films for Al Jazeera English. We were living in Paris at the time. And we started doing content for international broadcasters, basically. And we continued to do that. And we started doing Keiser Report and RT in 2009. We started covering Bitcoin in 2011 when it was $1. And it was, for me, it was a continuation of what I had been doing on Wall Street and with the Hollywood Stock Exchange. So I, really got into it quickly. Cash, or Hushmail, excuse me, which was an encrypted email service. And then he got into Bitcoin. He came on and he talked about it on the show. And so we just jumped on it right away, realizing that it was, I saw it right away as this is going to change as a new asset class, effectively. So that has a lot of implications. And then Stacy was really intrigued by all the feedback we got, which was highly negative. I mean, it triggered people in the audience. They're like, "Why are you doing this? That's just terrible. It's a shitcoin." And so we thought, if it triggers people like this so wildly, we should dig into it more and find out what's at the root cause of all this.
Okay.
So we had on folks in the early days from the cypherpunks and the early developers, early core developers. And, really, I would say we kind of exposed the world to Bitcoin in 2011. We put it on the map, globally speaking, because the show goes out to 100 countries, tens of millions of viewers. And there are, thousands of Bitcoin. We had 3 crashes and the 3 halvings that we've had since the first halving in 2012. And we've had 3 90% crashes. Wow. And the first one was from $30 down to $1. Then we had 1,000 down to the 250 range, and then 20,000 down to 3,500. And so those are really tough to go through. And it's we had in 2017 the block size wars, which was a very significant piece of history, where you had the hard forks and Bitcoin Cash and Bitcoin Satoshi Vision came around. And it was really then that it was proven that the miners don't really control the network. It's really the nodes that control the network. And this is when Michael Saylor, actually, who had gotten into Bitcoin in 2013 and ignored it. He was aware of it. He kind of looked at it and ignored it. But after the block size wars, he understood that it was a swarm of cyber hornets. He started to put the pieces together, and then now he's absolutely crazy about Bitcoin, and he's leading this what I call a speculative attack against the central banks, and which is really a remarkable situation. Arrested at the airport, it ended up going to jail. It was a really hard period because we were covering Bitcoin at the time, and we were heavily into it, and then suddenly we're like, what is? Wait a minute, are we going to jail? What's happening here? So it was very difficult. Unlike today, where you can just go to swanbitcoin.com/orange pill, and you can get $10 free Bitcoin by just signing up, and it's easy, and you can get it, pulled right into your Casa wallet immediately, and you have multi-signature security. Right. I mean, all that stuff's brand new. It's so easy today to get into Bitcoin compared to when you typically lose it, the wrong address, stolen, it's just like a totally wild situation. And today it's a lot easier, and the numbers prove it. The adoption rates are going up quite quickly. The institutional money is coming in huge. And so now we're at the sweet spot. If you look at it historically, If I go back to the dot-com era of the 1990s, as I mentioned, I started the Hollywood Stock Exchange in 1996. And then in 1997, I believe it was, when Netscape went public. And that was really the beginning of what the dot-com boom era was, when Netscape went public. Mark Andreessen, of course, was Netscape. And what did Mark Andreessen just do this week? He announced the year is going to go a lot higher.
Okay. Where do you think it's going to go?
Well, for 2021, my prediction is 220,000 per coin for 2021. And longer term, really, I say there is no top to Bitcoin because there's no bottom for fiat money. No fiat money in history has lasted. Over the past 300 years, they've all gone to zero or lost 99% of their purchasing power. As Voltaire once said, all fiat money returns to its intrinsic value of zero. And this is, we're going to see this with the US dollar. The US dollar is at risk of going the way of the Venezuelan bolivar. Really, it's turning into utter garbage.
Gotcha. So I think I understand what you're saying there, but there's going to be some people who are listening who think, wow, this guy's talking crazy. It's Bitcoin that's going to go to zero. How can the dollar go to zero, right? I have my trust in the dollar. Everyone uses the dollar.
Let me repeat. No fiat money in the past 300 years has escaped going to zero. There's been hundreds of fiat money. The average lifespan of paper money is 27 years.
Okay.
None have survived. The British pound is still around, although it's no longer backed by silver or gold or anything like that. It is purely fiat. And so we can't really say it's been around for the 300 years, but erased from existence. They've all gone to zero. So that's a very strong trend. How anyone could look at that history and say, well, no, the dollar is going to survive. The dollar is worth something. When it's backed by nothing except the Pentagon, as Paul Krugman at the New York Times says, the US dollar is backed by men with guns. Well, guess what? The Pentagon, those guns, they cost a lot of money to keep it gassed up. You know how much it costs to keep the Pentagon at gassed up every day? The jets, the planes, the transportation, all that petrochemical. They spend $250 million a day. Yeah. And oh, by the way, we just entered into a secular bull market for commodities. Oil is going up. All the prices of everything going up. So the Fed is like, oh, we're just going to print more. We're going to print more. We're going to print another 10 trillion, 15 trillion, 20 trillion. Well, and then we're going to all buy it all back and put it on our balance sheet again. We're going to monetize the debt. We're going to keep doing that. Okay, well, we already see inflation breaking out in the economy right now.
Yeah,
people are noticing it, and it's only going to get worse. So you're going to see the next few months, food and energy, it's going to be up 30, 40, 50%. Your wages are not going to be flat. Whatever the community decides it is, that's money. We know why gold has became money over time, because it has some great properties in that it has no entropy, right? I mean, it'll an ounce of gold today will remain an ounce of gold for 100 years or 200 years. It's stable in this sense. It's portable, it's divisible, it's fungible, it's desirable, and it became money, and it pushed out all the other versions of it, like beads or whatever. It's scarce. Gold is scarce, relatively scarce. And so for 5,000 years, people used ultimately gold. Even the central banks that are using fiat money, they do settle between them in gold. So we understand why gold is money. It's scarce, it's portable, it's divisible, it's desirable. And if we apply that to Bitcoin, it's absolutely scarce, unlike gold, which is only relatively scarce. Gold is inflating by 2 or 3% a year, so it's not actually as scarce as Bitcoin. It's more divisible. It's more portable. It's unconfiscatable.